Hello everyone, it's Chris with XFAB Theory. Welcome to my channel. If this is the first time you've come here, welcome back to those who are returning. Appreciate you being here. Today I'm going to talk about something that I really like a lot. One of my favorite things, money. I like money. It's a good thing. It seems to be not that popular on YouTube. I don't understand. I guess I'm a little weird. I like money. I like making money. So I'm going to kind of give you a little bit of an overview of my Webull account. It's up to about 48K. And I'll show you on little pictures here that I've taken. Show you my net account value. And it has grown to 48,300-ish for right now. I'll show you a graph here from where I started back in March of 2022. That's when I first jumped in, and you can see a nice little straight up spike to where I started. And then you'll see a continual graph there of the increases of me putting money in through 9/3/2023. About the only thing noticeable on that graph is August of 2023. You can see it kind of spikes up and then drops back. August was a weird month. Stocks kind of went crazy a little bit. They actually were coming back, and then it dropped down again. So it shows a little bit of a squared off spike there, where the market was doing okay and then kind of flattened out again. So I don't know why. I don't understand it, to be honest with you. Don't understand why the government's doing it. This is a government thing. They're interfering. They're manipulating and controlling the stock market. And it's for the purpose of trying to correct the economy, supposedly. I don't quite understand the thinking behind it, but it is what it is. I hate that saying, but it is what it is when it comes to the stock market. They're going to control it, and they're going to try to manipulate it the best way they can. And for them to control the economy, they need to just slow things down because things were getting out of control. Inflation was going through the roof, and so they've done a bunch of things to change that. Looking at my actual investments, I'll show you some of my investments. Well, I'll show you the whole portfolio. The hell with it. My biggest investment, of course, is JP Chase. This is something I've talked about in the past. Hang on a second. Good morning for my drink. I love my coffees. These things are amazing, by the way. I like just the plain one. They got different ones, but just the plain original works great for me. One of my favorites. Anyway, JP Chase. That's my biggest investment. I got lucky. I caught that one on a real dip for its stock price. They got stupid. Wall Street got absolutely stupid, and it dropped. And JP Chase, come on. It is the largest bank in America. It's one of the top financial institutions in the world. The government's already deemed it too large to fail, so they bailed them out way back in the past. They're not going nowhere. They're guaranteed pretty much. Nothing is guaranteed in the stock market, but if you were going to call something a guarantee, that would be pretty close to it. They're pretty much going to be around. And the value I'm going to get out of that one is pretty big. I got it in the $114 range. It could easily go to $170. So, and they do pay a small amount on dividends every quarter. So, Overall, that's my largest investment because I happen to get lucky and catch it on a downward trend. The next one down is realty income. Everybody knows right now the stock market and real estate is taking a beating. Um, but it's in times like this when a sector is getting beat up like this that fortunes are made. When things drop ridiculously low and everything's getting beat down, that's usually your best time to buy. Of course, I'm not giving any kind of advice, financial advice and investing advice. I'm not qualified. I am not certified. Get with a real investment firm to make your decisions and get advice from. I'm just giving you an opinion and based on what I'm doing and for, entertainment and all that informational. Take it and do what you want with it. But for me, my opinion, real estate's always been one of the pathways to wealth. And every wealthy person that I can think of has either been into or has a portion of their money invested in real estate in one shape, form, or fashion. It may be taking a beating right now, but I strongly believe that the real estate market will correct itself over time. So that one is showing really down. However, I'm buying into it. I'm buying into it as much as I can actually, because I'm pretty confident real estate's coming back, and it'll go back to what it was, possibly a little higher. It usually does, but it does do kind of a roller coaster from time to time, especially when they start messing with the interest rates like they have been. Real estate is one of the ones that takes a massive beating from a higher interest rate, but that's going to correct itself over time. So, moving on down, JEPI and SCHD. Both of these are dividend plays. They're both exchange traded funds, basically. The JEPI is what they call a covered call. Technically, they are selling options and trying to make money off of options. SCHD is a basket of different stocks based on the S&P 500. So I get a lot of diversity from that particular investment. Again, both pay dividends. The JEPI is monthly, SCHD is quarterly, and it's just another way for me to get income coming in every month or every quarter to buy more stock to grow. Now coming down, Pembina. That's one of my biggest disappointments actually. I'm really disappointed with Pembina. I bought into them pretty hard, and they're a Canadian oil pipeline. I felt like they were pretty stable. I felt like they're a good bet for continued income, and they've underperformed and been a little bit of a disappointment for me. They're down a pretty good chunk. They're down like 16%, and they do pay me monthly, but their stock price performance has dropped significantly, and I am not quite sure about that one. It may or may not come back. Being in the oil industry, it should, but it's questionable. So, yeah, you can't hit a home run every time. I'm trying, but next one down is going to be Main Street. Main Street's a business-to-business kind of loaner. They loan money. They're doing good. They're one of the ones that I'm watching for my future, along with the realty income. I'm going to strongly invest in those two. They have very good track records of dividend payouts, and their dividends keep growing. Um, I feel like they're going to be good investments for my retirement, that they're going to pay off consistently and with a good rate. So I really like them. I really like the Main Street. Moving down, JEPQ. They're another one of those covered calls run through JP Morgan Chase. A dividend play just to get income. Devo. I'm probably going to move out of that position. Devo's all right. It's another one of those ETFs where you get a whole basket of funds. You're not just buying into one company, you're buying into multiples. It's just not as big of a performer as some of the others, and I think I could probably realign those funds somewhere else. Verizon. I love Verizon. I use Verizon. All my equipment's through Verizon. Probably paying more than I should, be honest with you, but I like them. The coverage has been fantastic. Their performance is good. The Samsung equipment that I've purchased and used on the Verizon network works well. They're underperforming. Telecommunications is an up and down roller coaster, but right now they're underperforming. Might stay with them to see how it plays out. Might move that money out. Haven't just decided on that one yet. Moving down, Yield Max, the TSLY. That's a gamble. That is a $1,300 gamble on a brand new. It's hard to explain. They're playing games with the Tesla stock, and they're supposed to be paying out huge amounts of money monthly. But anytime you get something that seems too good to be true, it usually is. So when they're going to be paying out monthly a huge amount of money, that's typically not sustainable and might be a gimmick. Threw a little money into it just to see what happens, and I could make some money off of it. I could lose $1,300. I'm gonna play it out and see what happens. If I can make a bunch of money and then sell it and get out of it before it crashes, who knows? But for now, throw a couple bucks into it. Energy Transfer. It's a brand new investment for me. Just got into them. Going to give them a little bit of a try. Obviously, they're in the energy providing services and LP gas and so forth. They've got a good track record, so I bought into them a little bit to see how they're doing and see if I can make any money, and especially on dividends. They pay dividends. Next one down, high income securities. That's a straight out dividend play. They pay a halfway decent dividend yield, and they're down a little bit. But overall, for me, since I invested in them, I'm up a couple bucks. They're just hanging around because they give me a little bit of money every month. Same thing with Bearings. They're the next one down. Same thing. They're a business-to-business loan company kind of thing. They're a dividend play. The Van Eck Fallen Angel. That one, another one I'm going to probably move out of. I started messing around with them. They got a halfway decent dividend yield. They're okay. But I feel like I can realign that money to be more profitable for me. Next one down, medical properties. That one's a kind of a risky play right now. Medical properties is just that, medical properties. They are owners and leasers of properties like hospitals and medical clinics and so forth. They're in a little bit of trouble. They just cut their dividend in half. And even cut in half, that's still a good dividend. I threw a couple bucks into them because I think they might make a really strong comeback. Um, of course, they're having issues during this downturn in the economics, and some of the healthcare facilities, believe it or not, are struggling. So it's questionable. It's a gamble, but it's one I feel pretty good about. Worst case scenario, I lose 700. You know, best case, and I gain 700 because that's about the swing on it. There's about 100% swing if it comes back and does well. So, and they pay a dividend. Most everything I got on here pays me a dividend of some sort, and that's kind of my play. I want dividends coming in every month. That's going to be my ultimate goal anyway. But as I'm growing this portfolio, everything I get that comes in every month gets added to the money I bring in from my paycheck and put over here. So it allows me to buy even more stock every month. I'm buying more and more and more, trying to grow this. And so far, I've done well. And this is separate from my Roth IRA, which I grow that every year because that one you can only contribute X amount of dollars per year. And right now the limit for me being over 50, it's $7,500 a year. That's max I can put into it every year. So that one I'm contributing to the max every year. But this I can keep growing constantly. Gladstone, good. That's one I'm probably going to move out of as well. I haven't really decided. They're a real estate company that has a lot of office space, a lot of commercial business office type realty. That's really struggling right now. I'm not 100% comfortable with that one coming back as quickly as the overall real estate market. That one might have a longer delay before coming back. So I really haven't decided what I'm doing with good yet. That one, I might buy more. If I get some sort of indication, information that commercial real estate's going to come back faster, I might double down on that one or triple, maybe even quadruple. With it being down 27%, I could get a real bargain there. And if they come back good and strong, I could make a few bucks. But that one I'm kind of a little leery on. So, and the last one, Zim, that's a total friggin' roll of the dice. Pfft, who gives a shit? It's only 120 bucks. That's one I've thrown in there. It's supposed to pay back a whole lot of money. That's just a throw the dice, man, to see if that does anything. Worst case scenario, I lose 120 bucks. So $135. Sometimes you got to risk stuff, to see a crazy return. Sometimes you got to throw some money into things that are risky. But I don't throw big money at it. I keep my big money and my big investments in things that I know are pretty solid. Another thing I'm going to show you here is my overall profit and loss. Now, overall, I'm down. But a few weeks ago, I was way up. Like I showed you on that little spike there, that little squared off spike, I was doing great. So right now, it's stock market's down, so I'm down a little bit. But on a $48,000 account, being down $393, that's not that bad. It could be a lot worse. Going to also show you on here, let me get to it. On my profit and loss, I've got my dividends. I'll show you my dividends that I've been paid total. That's the total dividends I paid 18 months. So when you average that out, it's less than $200 a month, what I'm making in dividends right now. And the goal for this account is to be making anywhere between $500 and $1,000 a month on dividends. So I've got a long ways to go still to reach that target. But over the next 6+ years, I'm going to be looking real hard at where I'm putting my money, how much of a dividend I'm going to get back, and trying to use those dividends to buy more stock to continue to grow that, plus adding money in from my paychecks to buy more stock, so that when I get down to 2030, I'm hauling in a pretty good amount, and that will augment the Social Security that I'm getting and give me my monthly budget. So overall, because the market's down, it doesn't look like I'm doing that good. But overall, I really am. I mean, it's really not as bad as it appears. Being down a couple $100, that is not a big issue. That can change in a couple hours, literally. I can watch my account go up, and that a couple $100 just turn green, and all of a sudden I'm in the good. So, not panicked, not worried at all. Looking at my investments over the long term, 99%, 95% of them are solid plays, in my opinion. I have a couple questionable, one or two that are just throwing the dice, playing around basically. It could pay off. It could pay off. It could pay me a few bucks, and I could make a couple dollars out of it just goofing around. I like this stuff, to be honest with you. I found that I enjoy this. I enjoy the stock market and playing with it and keeping an eye on different companies and see what they're doing, and the prospect of buying into a company when it's down low and making some good money. I like that, So, I wish I actually had a lot more cash flow so that I could invest a lot more. I would really enjoy that, and not only on a personal level as far as having kind of fun doing it, but reaping the benefits of it as well. Yeah. And unfortunately, it just takes time. I can only go as fast as I can go. Based on what income I have, I pay all my bills every month and keep a couple bucks back in case of emergency, and everything else shoving away into either this account or the Roth IRA. I did start a Robinhood, but it's just to kind of play with it and check it out. I'm only got like 150 bucks over there. I want to see how that program works and whether I like it or not. So I may end up having two accounts. I may end up having the Webull and the Robinhood, and building two at the same time with two different strategies, basically. If I do the Robinhood, I'm probably going to do that as more of a risky, higher risk, higher yield play, and with smaller dollar amounts. My main account's going to be the Webull into very stable dividends and stable companies. It's going to be my rock that I lean on. The Robinhood might be something I'm kind of playing with to see if I can make a few bucks more, my dangerous play. So that's kind of where I'm at with the account there, and it's growing. I'm adding to it as much as I can. It's growing on its own. Of course, the volatility of the market, you can do what you can do. And I really do think that the market is going to straighten out. And it's not long before things start getting back on path the way it should. The Fed is already talking about slowing down with the rate hikes and all that stuff and trying to hold everything down. Things are starting to level out. The inflation rate's coming down a little bit. Unemployment went up, which is something the government wanted to slow the economy down so that they could slow down inflation. So things are going the way they want it, and it's stabilizing the market. So the market's not as volatile. It's starting to show a little bit of increase. And I think over the next 12 to 18 months should be, we'll probably have a little more dip, a little more down before it goes back up. But I think it's going to start turning the corner and coming back. And when that happens, I think I'm in a pretty good position for most of my investments to start raking in some good money and be worth, stock price wise, more than what I have invested. So I'll start turning in even bigger profits off of that. And of course, I'm going to keep buying, especially when things are down. I'm going to keep buying as much as I can. So that when it does come back, obviously I make more profit. And that's kind of where I'm at, guys. If you have any questions for me or anything like that, drop them down in the comments. Again, I can't give official advice on finances and investing. I can only give my opinion and what I'm doing for me, and what my strategies and thoughts are. But I'll gladly answer any questions or any comments. And I think I'm gonna wrap that video up, guys. So hope you appreciated it and liked it. If you did, hit the like button. If you know anybody who's interested in this kind of stuff, share it to them. And we'll see you guys in the next video. Thanks for watching.